Chapter 5, Problem 2, Part 2, the financial statements. In Part 1, we handled all of the transactions for 2018 and we put them on the equation. Now we're going to go through and we're going to do first the income statement, then the statement of owner's equity, and then the balance sheet. So here's the income statement. The income statement, we need to worry about just this column here, revenue minus expenses. So that's what we're going to do. We're going to look at that column. Let me put my notes up so I'm not saying anything stupid. Okay, so our revenue is 78 plus 36, 78,000 plus 36,000. So our revenue is 114,000. You see where we got that we added those two revenue accounts together. The next we have to do is look at our salaries, or all our expenses. We have two. So we have 38,000 for salaries expense. And we have 450 of what's either called bad debt expense, uncollectible accounts expense. This was where we put aside the money in case we didn't collect everything. So that was $450. And notice I'm not using negatives here. I could if I wanted to, because when I bring that 38,450 over here, I know that I have to subtract it, because revenue minus expense gives net income 75,550, which, by the way, is that number there. So I'm hoping as we go through this, you're seeing how these things tend to tie together. Well, that's 75,550. That falls through my magic funnel. Remember, revenue minus expense, net income, falls through my little funnel to retained earnings. And for us to do that, we need to do a statement of shareholders' equity. I just happen to have one handy, and I just happen to have my cheat sheet handy that I worked out earlier. Let me put it over here, so again, I try not to say anything too terribly stupid. Well, our beginning common stock, remember that number? $10,000. Now, if we had sold more common stock, we would have added it in, but we didn't. So, beginning plus what we sold, 0, is ending. Again, this was our first year of operations, so our beginning retained earnings was 0. Our net income, remember, is 75,550. 75,550. So our ending retained earnings is 75,550. And our total stockholders' equity is our common stock and our retained earnings, 85,550. Now, if you remember right, that was the other half of the balance in balance sheet. So when we do the balance sheet and total up all of our assets, that's how much we should end up with. So let's see if that's the case. Here's our balance sheet. There's my cheat sheet. Okay, our cash, 77,000. So cash, 77,000. Our accounts receivable is 9,000. But remember, accounts receivable is reduced by allowance for doubtful accounts, which was 450. So we subtract that minus the 450, and our accounts receivable at net, or the net realizable value of accounts receivable, we did this in Joey's Bike Shop, is $8,550. So our total assets is 77,000 and 8,550. Our total assets combined, therefore, is 85,550. Our common stock is 10,000. And our retained earnings, 75,550. 75,550. Our total liabilities and shareholder equity, because we have no liabilities. I forgot to say that because we didn't borrow any money, so that's zero. Total stockholder equity, 85,550. So our total liabilities is 85,550. And indeed, that is the balance that we were hoping for in the balance sheet. So I want you to start seeing how these things flow together. We go from the equation statement to the income statement to the statement of owner's equity. Finally, we go to the statement called the balance sheet that ties everything together. Now, the last thing you want to talk about, and I know, believe me, this is the last thing you want to talk about, is statement of cash flows. This isn't so bad if you think about just the cash. So let's go back to the very beginning to this and take a look at the things that we got for cash. Okay, cash inflows from customers, cash outflows for operations. Well, what cash came in from customers? Altogether, the cash that came in from customers was not this, because that's on account. The cash that came in, let me find a different color pen, orange, as in orange, you're glad I saw that, is this: provided cash, provided services, received cash, collected cash from employees, or from our accounts receivable. So 36 and 69, 105,000. That's the cash that we received. So let's write it down. Stick a magnet on this to hold it in place. So cash inflows from customers, 105,000. Remember, that's the 69,000 from accounts receivable and the 36,000 of services we performed for cash. Next, they tell us that we paid $38,000 in salaries. Paid salaries. Salaries are operating. It's what you pay or what you get for doing what your company does. That's the whole concept of salaries. So we paid $38,000. It's an outflow. You don't always have to make it as a negative because it's labeled as an outflow. You know you're going to subtract it. So the cash from doing what we do from operating expense was $67,000. Now, investing activities. Did we buy any buildings, any plants, any machines, boats, planes, trucks, cars, automobiles, any of that? No. So we had 0 operating activities. Cash flows from financing activities. Now this is our stocks, our bonds, our mortgages, our loans. Do we have any of that? Yeah, that's how we started, right there. That's the only financing activity we have, $10,000. So that's the cash inflow from common stock, $10,000. So our net change in cash was $77,000. Our beginning cash was 0. Our ending cash, therefore, is $77,000. Now, they also ask us, what is the net realizable value of the accounts receivable at the end of each year? Well, we already did that, but we'll do it again just to make them happy. The accounts receivable was $9,000. Do you remember where we got that from? Don't believe me? Make me show you right here. Accounts receivable $9,000 minus the allowance, and this is just the definition. You just gotta stick this in your head. And the net realizable value of accounts receivable, $8,550. So that was year 2018. We'll start all over again for 2019 on the next video. See you there.